All right, hello and welcome everyone to another episode of Market Trading. I am your host, Tone Vays, and today I am joined by the one and only FilbFilb. We're just going to call him Filb, no reason to say it twice. Joining us from the UK. Oh shit, my bad. I always messed that up. And joining us from the UK to just have a little chat about the markets. I don't have guests very often these days, so it's always a pleasure. Filb, how are you, brother?
Hey man, yeah, good. Good to be back on the show. Normally we get together and talk when there's some pivotal moments in the market. So it seemed like a good idea to catch up today.
Yeah, I really should have reviewed our last episode. I know it was probably about a year ago. Would have been really curious what our thoughts were back then and how wrong we were. Now we're usually somewhat right on the markets, especially you. You've been doing this for a long time, going back to 2015. I remember when I was first starting out doing analysis, and you started out around the same time. So it's great that you're still around. Very few of us still doing this since those days. So many people have come and gone. It's crazy, right?
That's right. Yeah, we're some of the last survivors. But yeah, I remember one of your. In fact, I think your YouTube was one of the first channels that I actually watched to do with crypto, and I was always an avid follower, even though I didn't always necessarily agree. I think most of the time we're generally in the same ballpark. But yeah, it's good to reconnect and have another look at where we are.
Awesome. Well, those of you guys that have not seen guests for a while, we do have a somewhat specific format. We start off with Phil talking a little bit about himself and what he does while I pull up links to his YouTube, his company profile. Then I do a brief 5-minute summary of what I think of the market, but you guys watch me all the time. So the rest of the time will be up to Phil to show his charts and what he thinks of the markets, and I will be interrupting him as often as possible to ask additional questions on things I see in his charts. All right, so Phil, give us a very brief intro, and I'm going to try to click on the proper links as you do it.
All right, cool. So yeah, been involved in crypto one way or another since around 2015, late 2015, early 2016. So I've seen a couple of cycles through now. And yeah, but basically been trading in crypto since then. Obviously, like most people, more of an investor at the start. And prior to that, finance experience for several years. Prior to that, but eventually there comes a point where it makes more sense to be involved in crypto than it does with prior work. So took that step. And yeah, after several years of trading, ended up founding Decent Trader, which is effectively a website which provides lots of different resources for traders, from on-chain analysis through to algorithmic-based trading. Really trying to bring together some of the learnings that we've made along the way into a place where people can really sort of understand what they need in an easy format. I think it's quite tricky to get lost in the market trying to look at everything in all the detail, and what we do is bring that together in an easier, more digestible format. So fundamentally, I'm a Bitcoiner really, but we do also review other altcoins as well.
Yeah, I sometimes I review altcoins as well, but it gives me just a chance to talk shit about altcoins from a fundamental perspective, while I independently review their technicals. Awesome, thanks for that, Phil. So real quick, I'm just gonna go through a quick summary. I made this chart a little while ago. I made it in the beginning of the year, and this is my likely path for Bitcoin long term. We're going to start off at the big scale, then I'm going to work my way down. Maybe I should have done it the other way. But my view is we are in this last year of our 4-year cycle. The 4-year cycle is never the same, but the one thing that it manages to do is it manages to have a bull market and a bear market for Bitcoin in every single 4-year cycle between the halvings. And I don't expect this one to be anything different. Of course, we don't know if the high has been made for this 4-year cycle, but that doesn't matter. We clearly had a huge bull run. that topped in the $60,000 area twice, which the second one caught me really by surprise. I think we discussed this the last time you were on the show. I'm pretty sure you've been here after October 21, November 21 when it topped. And we did have a full bear market, and I believe the bear market has ended. I've believed this since we've broken 20,000 to the upside, and then especially when we pulled back to that 20. These are my two realistic paths. We could triple top around 60 before pulling back into the halving, or we can take a more timid approach into the halving. And then either way, I am expecting a bull run post-halving. My low-end target this time around is 200K. Clearly, those $100,000 to $300,000 targets within the last halving cycle did not work out well for those that were predicting them. I was more on the lower end of that. I'm not going to talk about that chart, but I went through history. By the way, if you're looking at this chart, I went through history and try to point out, I'm going to separate this between the bull chart and the bear chart. And I tried to pick out the exact weeks throughout the entire history of Bitcoin where I've publicly been as bullish or on the reverse side as bearish on Bitcoin as I am now. And these are all the reasons. So when Bitcoin broke above 22,000, so I put price 23K. This is the more recent one after the pullback to 20, the way we bounced off of 20. These were my reasons. And I was basically saying I'm as bullish as in these prior times, like during the COVID crash. I was super bullish right at 4,000 after we crashed, the breakout to new all-time highs, and a lot of other points. The one that I've probably been most wrong on is being equally as super bullish when Bitcoin broke 50K the second time around back in September. And I expected us to get a lot closer to 100K by breaking the early 2021 all-time high. But we did break it, but not by much. So that was probably the one I've been most wrong about, but I was equally as bullish. Maybe I'm even a little more bullish right now. All right, let me just go through these real quick as a lightning round. On a weekly scale, I was looking for a little bit more of a pullback, but then didn't happen. That's okay. My target on a weekly scale is the $34,000 area. That's the underside where the big breakdown happened. That's also the most, that's the average price back in the drop in early 2021. And so to me, that is a good area for Bitcoin to be a bit overextended, coming off of 715K, and then have a more significant pullback down into those moving average zones. This is my current allocation chart based on Tyler Jenks's Consensio. I've been 100% bullish since the bounce off of 20K. I did wait a little bit only because I try not to enter on the weekends. And this entire monster candle took place on Saturday and Sunday. So I didn't put it in until Monday. It's just the way I usually do it. Normally, if this was a weekday, this 100% bullish allocation would have been entered a lot sooner price-wise, but only about 24 hours time-wise. On a daily scale, yesterday was an MRI top, which is the indicator that I use very, very often, all the time, I should say. I did expect a pullback as of yesterday. It looks like the pullback started like one day early or so. And it also looks like the pullback ended. It was very, very short because we broke the MRI count and continued to consolidate. I'm now very, very bullish. This is an incredible start to the morning. I am actually really optimistic about the S&P. The S&P just broke ridiculous resistance that we've had since September of last year. So I've been bullish on the S&P since the October lows. Based on my charting, October came in as an MRI buy, and on a seasonal scale and on the MRI. And I was one of the few that did not believe that the Great Depression is coming, that the 29 crash is coming. I've been bullish on the stock market. I think the stock market is going to go to new all-time highs. If not this year, then certainly next year. And people are starting to change their view on it, but they're all being very, very skeptical. All right, this is really taking too long. Short-term view looks great. Not even going to get into that. GBTC, I'd love to get your thoughts on GBTC. Oil, I am bullish on oil. I've been feeling like a goddamn idiot for the last year or so, because I've been bullish on oil the whole time. The U.S. has been depleting its strategic oil reserve. I refer to the United States as a junkie, siphoning of gas on a car parked on the street, and they're leaving the U.S. in a very vulnerable military strategic position by doing so. Gold, I believe, is breaking out to new all-time highs, and my target on gold is approximately 3,000 over the next year or so. I think gold's going to go up as well. And I'm very, very bearish on government bonds, of course, and the interest rate. Powell is looking to raise the interest rate once again, which to me seems a little bit crazy. UK is raising interest rate as well. Maybe you can comment on that. And just to let people know, we are having a financial summit in the UAE. I will, right after this video ends, I'm going to try to convince Filb to be there as well, to join us in November 5 to 10. Check out the website, check out our YouTube channel. Okay, on that note, that's my summary. Phil, unless you have any questions on any of the charts I just pulled up, I'd love for you to start showing your charts, and then I will be asking as many questions as possible. Phil, you with us? Where's that audio coming from? I don't hear Phil anymore.
Hey, Tone?
Oh, there you are.
Yeah, I'm getting some sort of lag. Just a moment.
Oh, okay. Well, you can always watch me on a delay on YouTube.
Yeah, I seem to be getting back feedback off the live stream. Just a minute. Can
yeah,
you
if you have the YouTube open, you're gonna get a little bit of feedback.
Is it on yours?
No, I don't hear anything really. I think I'm fine.
I've got it. I've got it.
You got it? You solved it? Okay, cool.
Yeah, fixed.
Okay.
Cool. Okay, I'll share my screen now. Yeah.
So that was my 5-minute summary. Let me stop sharing my screen, and the floor is yours.
All right. So, yeah, I didn't have too many questions about what you ran through there. I think broadly speaking, we're going to be roughly on the same page anyway.
Yeah.
However,
well, my audience is already complaining to let you speak, but I wanted you to know what my position is on the market before you give your position, so you have a general idea of what my thoughts are, so we can see how much we match or disagree.
Absolutely. I think that's a good idea. So yeah, thanks for giving me the opportunity to speak. So hopefully we'll find maybe some nuances that you haven't talked about there too much, but as I say, broadly on the same page. What I'm going to do is I'm actually going to do something broadly similar to what you did, which is go through the crux of what's going on and try and form some sort of opinion as to where we may be going next. Obviously, this chart that I currently have on the screen is broadly what I use as my framework as to where we're going to go to next. It's been done to death, copied and so on. Not necessarily I'm saying copied from me, I just mean everyone's copying it amongst themselves. But broadly, as you said, we have the cycles which we run through each halving. And what's predominantly important at the moment is we're getting towards the 100-week moving average at the moment, which is you can see here is 33,000, roughly 500-ish. And previous cycles from where we currently are going into the halving, we normally retrace 61.8 prior to the halving. So everything that we've currently seen in the Bitcoin price has been very similar to what we've seen in previous cycles. So this is the bull market compared to basically starting as of the halving, which is the way I've always done it. Which is my idea was that we were going to find a bottom between the day 800 and day 1000 since the halving. We have done that. We've put in a top broadly in line with the previous cycle and the cycle prior to that, between day 400, day 600. And as such, the next thing that happens is that we wait for the halving, and then generally we take off thereafter. I'm very much a straightforward kind of person when it comes to doing analysis. You know, you can do a lot of analysis and end up in a paralytic. Is that right? Maybe it's not paralytic, but in a state of paralysis,
Paralysis,
whereby,
yeah.
yeah, where you end up not necessarily being able to see where things are going. But overall, you know, the trend is the friend until the end is a reasonable assumption, I think, with this market, because like I was saying on Twitter earlier, we have basically this is one of the what we call like the investor toolkit, part of the investor toolkit for Decent Trader. But ultimately, we have this green line here, which is a 2-year moving average. And the 2-year moving average is, you know, roughly speaking, like the 100-week moving average, you know, in terms of weeks. And you can see that, you know, I posted earlier on today, the window's closing. And, you know, broadly speaking, once we get above the 100-week moving average, you know, we tend to hit the 61.8 between that point and the start of the halving, you know, in advance. The time frame depends, you know, it's happened in different ways previously. Every cycle is different. You know, there's a rhyme here, but there's not an exact correlation between each previous cycle and what's going to happen in the future. But the point is, you know, once we get above the 100-week moving average, in my opinion, that like is the final piece in the puzzle for me that would say, yeah, we're probably going to do this again. Now, there's a lot of other markets and stuff which we can talk about, which will help us to have confidence in that opinion, because I think the big elephant in the room is that a lot of people are still really bearish on legacy markets and traditional finance. So I will approach that subject as we go. But as I say, windows generally closing. And I sort of ironically stated here, someone said, you know, is this financial advice? And it's not financial advice. I must state, actually, none of what I'm saying here is financial advice. However, I like to think of this like an IQ test, you know, one of those things where you look at a pattern and then you see what happens next in the pattern. And I think that if you had an IQ above 100 here, you'd probably state that the most probable outcome is that this thing goes up after it goes through this period. So largely, you know, I think that there are buyers in the market who are OG Bitcoiners who basically saw Bitcoin retrace near towards 85%. And they thought, hey, you know, I sold close up at the top and I want to get back in. So I think a lot of those old guys have come back to the market to play the cycle again. And I think that a lot of other people, as we broke the 200-week moving average, also saw that as a sign that we were going to move higher. And with that, you'll have a combined people who will have thought, well, actually, we're still below the 2-year moving average, which actually still represents value in the cycle that we're moving towards, and relatively low risk on the basis that actually, once you break it, it generally becomes support, with the exception of the COVID outlier, which, you know, will that happen again? I don't know, but you know, let's assume it's an outlier. So overall, in terms of value, Bitcoin is kind of doing exactly what it has done previously. It's in exactly the same sort of place and doing exactly the same sort of thing at the exact same sort of time, with the exact same sort of fundamental thing coming at us in a microcosm. Obviously, we've got the external markets as well, which I think are worth exploring a little bit. But fundamentally, you know, if it ain't broke, don't fix it is quite a straightforward approach that I have to pretty much all of my life. And as far as I can tell, this thing isn't broke, so I'm not trying to fix it. So yeah, for me, fundamentally, the 100-week moving average is really important. I mean, obviously, it's also coming up around the same sort of area where we have this sort of high time frame previous support, which, you know, might experience resistance. And we're currently testing that and finding that out now. I think it's probably worth getting into.
Right. So I have that a little bit higher. So that same resistance that you have, I have that at the bottom of the bodies of those candles instead of the bottom of the wicks. So that's the difference of how that's why for me it's 34,000. I have the same exact line, only it uses the bottom of the bodies instead of the bottom of the wicks.
Yeah, I mean, to be honest, when we get to the lower time frame chart, I think that line actually moves a little bit. So I think I didn't actually have it on there for really that much purpose other than to show that it's generally where resistance is.
That's why I tell people you want to draw your resistance lines as thick as possible so that it's obvious when they're broken.
As much margin for error as possible.
Yeah.
But yeah, so I think, generally, I think most people are aligned, or at least most people who want to be long on Bitcoin or are interested in Bitcoin understand this. The big sort of question comes around, what's going on with everything else and how is that going to impact crypto moving forwards? So there's that, and also, just how high could Bitcoin go? Because obviously you addressed a situation which was around thinking we might go to 200K. Now, what we find is that people say, well, last time we hit a top of, prior to the last cycle, we hit a top of around 20K and we only went to, let's say in round number 60, but it was really 70. So, we got a 3x. So that must mean that we're only going to do like a 1.5x next time. And I fundamentally think that that's an incorrect way of thinking about this market. And part of the reason for that, I'm going to not be able to find my analysis here, just a moment. Part of the reason for that is, I've done a little bit of modeling around the actual price, like trajectory, if you like, itself, because anyone can come along and draw like an arbitrary arc or a line on a graph, which will give us some indication as to where we may be going. But I did a little bit of modeling not too long ago. Rather than looking at some sort of average, looking through the Bitcoin price, we're looking at the peaks of the previous cycles and also the lows, and then plotting out on the chart and trying to find is there some kind of correlation between the trajectory, using regression, the trajectory of the highs and the lows of all of the cycles and everything when you put it all together, and you can see we end up with an R2 of like 0.9938 and 0.999 almost, which is extremely high. And if you do that and then you model through or you extrapolate through into the future, what that looks like in terms of price, it doesn't actually tell us that the previous cycle, the correlation between the previous two cycles should yield a return which is diminishing. It doesn't actually say that at all. It actually says it's more likely to be roughly the same. And the price appreciation within this model generally depends upon the timing of which that you get to the halving. So I did actually cycle through and look at what the number of days from the cycle to cycle top would be. And yeah, actually it throws out that, if we do an early cycle peak around sort of 368 days, it would say, the upper end that we could get to would be about 218K, and later in the cycle, 550 days, so it might be 250. So I'm broadly aligned with you and your views. I'm not sure how you actually arrived at your view. Did you have any reason as to why you were coming up with 200-ish?
Well, for me, it was basically, I'm not a big fan of the regression lines. So if I can throw my chart up there real quick, and it'll be easy for me to show you. So I'm going to steal screen share from you. For me, because I don't like regression lines, and the reason I don't like regression lines is because as new data comes in, the historical version of the regression line slightly alters. And I'm just not, this is also why I don't like Elliott wave. I'm only a fan of
that's true, Tone. That is true.
Where the lines will never change historically. And for me, instead of doing a regression line, I just do a more of a trend line that will not change because unless historical data somehow changes. And we've always managed to hit the underside of the supporting bullish line. And the sooner we hit that line, obviously, the lower the price will be. So once I drew these lines in, the only one that hasn't hit was just the original one because it was just too steep. We hit the rest of them, and I am expecting to hit the underside of that line. So we can hit it early, sometime this cycle, and then we're just going to triple top for a little while, which is fine. Or we hit it late, and the later we hit it, the higher that line would be.
Sure, yeah. I mean, I broadly agree with that. And that's why I specifically ran from only the highs and the lows of the cycle. So This won't update as we go through the cycle. The last data point was the highs of the previous cycle. So this is fixed and won't update through the cycle. So it's kind of halfway towards, it's a compromise, if you like, with what you're saying. So it's not going to update as we go.
All right, Phil, real quick. I did mention I actually have to have a delivery coming, and they're going to be here in like 5-10 minutes. So I may have to walk away for like 10 minutes. But my audience is in great hands. It's just that I may not be able to ask very critical questions because I may be missing it. Maybe I'll turn it on my cell phone. But if you see me disappear while you're talking, Phil, I'll be back in 10 minutes. So just keep going.
It's okay. I'll hold the fort. Don't worry. So yeah, as long as we're talking about bullish price numbers, hopefully we won't see a drop off in people watching. Anyways, so yeah, I mean, broadly speaking, I think we're aligned, you know, a little bit of difference in how we're getting there, but roughly the same sort of trajectory. And then there's a couple of other things I wanted to mention around the money supply and like why like some people can't comprehend Bitcoin getting to the value that it's currently at. So obviously one of the big things is that we have had the money supply pumping crazy over the past, well, if we go back to 1998, or well, even further, actually, 95, we've basically got a straight line. This is on logarithmic of the actual money printing that's been going on. So when COVID came along, obviously, we had this huge increase in the money supply all at once. And, you know, we're broadly being told along the way that this is transitory. It wasn't going to be resulting in inflation and all this sort of thing. Nothing structural inflation coming as a result of it, which is obviously rubbish, which we knew at the time. It just takes a while to play out, which I think is always really important to remember, is that you can be right, but it might take, you know, 18 months for you to be right, which is always tricky when it comes down to this sort of thing. But generally speaking, we're on this upward trajectory with the printing of money. And we obviously had as well those seismic events with Silicon Valley Bank and also Silvergate Bank, which created a little bit of concern. I think people started to readdress the idea of needing to have position in risk, something that was, you know, risk off environment. And what we do know over this period of time, and this brings it back towards gold, is that the money supply is vastly inflated along the way. But what we haven't seen is a corresponding increase in the price of gold or other risk-off assets. So, you know, I was talking about 1995, you know, which was way, to be fair, down here. And obviously over that period of time, gold has appreciated in price. But you know, in the last, since 2012, basically gold hasn't really increased. Over a decade, gold hasn't increased. Whereas at the same time, what we have actually seen is the money supply here increase vastly. So the money supply has increased by 132% since around sort of 2011, whereas gold's up 30%. So what I think that we have is this like loss of or a disconnect rather between the increasing money and also risk assets that are representing the risk associated with increasing money. Because obviously, if you print more money, you'd expect that an asset should increase in value, but clearly it hasn't. So I think there's basically a gap between risk-off hard money assets and M2 overall. What's also interesting is that M2 is very much on a clear trajectory to the upside here. You know, as we say, you know, if you're ever going to find a trend, this is probably it. You know, it's going back to 95, as I say, so it's practically a 30-year trend, which was broken with this bubble of money printing due to COVID. And what we have at the moment is actually a downward movement caused due to the monetary policy of the Federal Reserve to take us back, in my opinion, generally towards that trajectory, which is where I believe inflation will be resolved. As I said earlier, when Tone was with us, before he went to get his package, whatever that is, you know, we talked about how the halving cycles are going to come. And in my opinion, while this monetary policy is on a downward trajectory, You can see that ultimately it's going to take us roughly to around March next year if we continue with this path to get us back on the old sort of money printing, money expansion regime. And if you think about it, as I said at the start, I'm a simple guy. I like to do simple analysis because I think that that's actually the easiest way to see what's going on. And in my opinion, inflation will probably be resolved once we can get back onto the trend. So once we correct for this big bubble here, I believe that we're going to be generally back to the old inflationary regime that we used to be, and objectives should have been achieved by that point. Now, what I will point out is that this trajectory here, which would lead to money expansion, which we know is good for Bitcoin, is going to come almost exactly in line with the halving. And what we know that happened after the previous halving here is that we've got a big increase in the money supply and the price went up. So as far as I'm concerned, I see no difference between this cycle and last cycle. I think it's hard to come up with a narrative other than the fact that we have had these unusual events such as, the war in the Ukraine and also this big inflation problem. But overall, things aren't that different. And I think we should really focus more on the charts themselves as opposed to narratives. I know a few people who are hung up on the idea that Bitcoin has to come down to sort of $8,000, which would be a significant correction from where we currently are. And you can sort of come up with narrative around that, but really there's no evidence to suggest that that's going to happen at all. It's really hearsay at the moment. And typically what I tend to do is follow what the market's actually doing, as opposed to trying to come up with my own ethos around what's going to be happening. Okay, I do that a little bit, I will say that, but fundamentally, if the market's doing something different, then perhaps it doesn't make sense. So overall, yeah, I think things are generally looking like they have done previously. I think what's interesting, again, as Tone was mentioning, is the stock market, which we've got the S&P 500 here, and again, we've got the 100-week moving average overlaid. I will just double check that is the 100 actually. Give me a sec. Yeah, it's 100. So the 100 is basically capping price at the moment here. You can see it keeps getting rejected, but we keep putting in these higher lows as well, having bounced off the 200-week moving average. So this is really telling me that actually, we've found a bit of a low and we are putting in higher lows, and it's showing a triangle ultimately that probably wants to move up. Now, it's a shame Tone's not here right now, but one of the things that I think has been a bit of a catalyst with this is that obviously tech stocks are going to be hugely exposed to the artificial intelligence developments, shall we call them, that are due to come and are in progress. And the outcome of that means that ultimately, we're going to see overheads drastically reduced in terms of cost. And at the same time, we're also going to see marginal costs, so the actual cost of producing goods for manufacturers, not tech, obviously, but that's also going to come down. And what that means is at the minute, we've got these PE or price earnings expectations of the equities markets, which are going to have to take a reassessment of their values. So obviously price earnings will look at the profit and loss and the overall earnings of the company. And if the overheads and so on are going to reduce by, let's say, 20%, your PE ratios are wrong. Or your expected PE ratios in the future are going to be wrong. And that's why I think the tech and the S&P 500, sorry, I'm looking at the S&P here, aren't I? Tech looks somewhat similar. I think that's why this is what's driving the bounce at the moment. I mean, there's definitely still risk around the inflationary stuff, the potential of recession, the possibility of escalation with Russia and so on. But the reality is that doesn't seem to be escalating at the moment. So I don't think it's as much of a risk. The longer time passes, the less these things seem to be risky. And so maybe we're actually going into a stage where we have tech leading, and we're going to actually see tech coming up with a lot of new innovations, which are going to lead to a huge amount of cost savings. And actually, the economy is going to do really well. There is a debate perhaps around these savings, if they result in a lot of job losses, what happens with demand? Is that actually going to still be there to prop up the companies that are making these savings and, going to support those earnings numbers? Or are we actually just going to see, are we going to see demand stay as it is? People find new jobs in a new sector, building new stuff. I would like to think it was the latter. But overall, I think, it's very easy to listen to people talk about this sort of doom porn, which I don't really subscribe to, because, if you really think that we're all going to get blown up by nukes, go and dig a hole in your garden. And in the meanwhile, I'll get on with my life and actually reality. So until I get blown up by a nuke, I'm not really that worried about it. And even then, not really worried. So gold. Gold's an amazing chart. Let's just have a look at the 3-month chart of gold. It is.
I'm back, Phil. I heard my
yeah.
name. I tried having the YouTube channel on. You were going to ask me a question, but I see you are also a little bit bullish on the general stock market.
Yes, yeah. So I was just saying, I think that basically stocks are ultimately going to have to go through repricing with the artificial intelligence savings that we're going to see, and the impact on PE ratios in the future might be something to keep an eye on. Gold is very much, if there's one market I'm really sort of excited about, it's gold, because it's just such a beaut of a technical chart. It's effectively got this massive cup here, and then this huge handle, which has been playing out for years. And the bigger the consolidation, the better, really, in my opinion. And
what are your thoughts on silver? I've been just talking shit about silver for a long time. Yes, if gold goes to 3,000, which is only 33% up, silver can go up 100%, but it will still only get it to an all-time high. It's just that when gold eventually turns down and loses 10%, silver is going to lose 50% again.
Right. I mean, silver's like the high beta to gold, right? Or it used to be. I don't know whether or not there's evidence for that anymore.
It's a high beta, but it's a decelerating rate. So it's a high beta, but it's a lot higher when both go down than when both go up. Right.
I mean, overall, silver, again, like, if you pull back, I do tweet about silver, actually. I do have a vested interest in it. I always go back to the fact when I actually invested in Bitcoin for the first time, I put exactly the same amount of money into silver. I think I've done a 2x on my silver, and I think I've done like I don't know how many x, hundreds of x on
you're way more bullish on silver than I am. I don't think it's going to go up that high.
Yeah, I mean, perhaps not. I just think, while you were away, I was sort of saying that I think that risk off assets, which I think silver still falls into that bracket a little bit, are underpriced, purely due to the fact that the money expansion has happened, and the valuation of these haven't gone with it. They should have gone with it to some extent, and then we've had these wobbles in the banking sector, and I think as a result, people are paying a bit more attention to risk off and the valuation of that. But I mean, alongside that, you have the BRICS economies that are talking about doing their own currency. And I think demand from those BRICS economies, or at least anticipation of the idea that there's probably going to be something coming along with, backed by, to some extent, a basket, which is likely to include gold. So I think that's probably why these markets are doing quite well. I'm definitely not an expert on these markets particularly, but overall, I do think that, overall have to go up, really, because we're going to continue to expand the money supply. And as I say, I think there's a catch-up effect that needs to happen here. Silver itself, it obviously has commercial properties, manufacturing. So there is some benefit there, but I think historically it was kind of seen as like the shit coin to Bitcoin, like, you know, the shit coin's equivalent of gold is to Bitcoin, silver is the shit coins. And I don't think people really speculate like that anymore. So I think that fundamentally silver's never going to be what it was. But you know, the big picture is, okay, so going back to this 200K Bitcoin, like how realistic is that? Is it just, you know, pie in the sky, wishful thinking sort of thing? I'll go back on my chart here. Yeah. I think what's important to remember is that, what have we gone? Sorry.
Oh, go back. What was that chart? What was that chart you just showed? I'm just
this
you don't
one.
have to comment. Okay, I'm lost the market, Bitcoin dominance. Oh, I don't want to get into this. Okay, never mind.
Okay, yeah,
I don't want to go down that rabbit hole. I hate the Bitcoin dominance concept. I want to make my own Bitcoin dominance chart with my own metrics, but I'm too lazy to actually do it. So I got to explain my metrics to someone and hope that they do it.
Yeah, I've got another one which doesn't include stable coins as well.
Oh, that's great. You built your own?
Yeah, so if you, I mean, anyone can actually go and have a look at this now. If you have a look for an indicator called blockchain data, FilbFilb, this one.
Oh,
it might
cool.
be this one. Not sure which one it is.
All right, I'll check that out. Yeah, I need a Bitcoin dominance chart, A, without stable coins, and B, also just Bitcoin versus top 20. I just don't want the rest in there. And also, I want to kind of adjust them based on how active those blockchains are. So which would be the hardest part to program in. So for example, if no one is using your thing and like it shouldn't be at its full market cap, but if it's actually being used a lot and it's actually being used more than Bitcoin and people are paying fees more than Bitcoin, then it could also actually have more than its weight of market cap as a relevance.
So you want to flex it for usage, basically. Yeah,
correct.
Makes sense. Yeah, I mean, looking at the market cap without stables, it does actually look a little bit different. It sort of suggests we're actually more at like a 52 at the moment, and it's very much on the way up. Overall, I mean, generally speaking, without, I know you didn't want to talk about too much, but generally speaking, before the halving, Bitcoin tends to be initially the main benefactor of the hype leading into the cycle, and then it's not until after the halving that we get that upside. Who knows whether or not the alts are going to do well or not next cycle? Typically, you know, we always end up persuading ourselves that they're not, and they somehow do. So I'm not, again, you know, in line with what I said, you know, it'd be unreasonable probably for me to be, or certainly not be consistent if I was to say that I don't think that alts are going to ever pump again, because, you know, they're going to until they don't, in my opinion.
Hey, Phil, sorry, since you have this chart up,
mm-hmm.
Can you talk about the daily chart of Bitcoin? I mean, after you finish your thought, I just don't want you to get off that chart.
Sure. I mean, this chart is basically derived from the weekly chart. So obviously we've talked about the 100-week moving average, and the 100-week, as I say, it's like getting above that should be what could become support. Getting above that might be tricky. At the moment, it's at this 33,400.
Yeah, that's that $34,000 range where I'm expecting a decent pullback before breaking it.
Yeah, and I would generally subscribe to that. And the way in which well, as of yesterday, there was a bit of a debate about whether or not we come lower or not. But obviously, we've now bounced off this major support here, which was the previous highs, which is normally a really good sign. It's also a really strong candle. So we are very much back within the previous week's range of trading. And it looks positive. You know, it looks pretty similar to this sort of thing here, where we had that big move back up. Now, if we go and have a look at liquidity, so this is one of the tools that we have on the Decent Trader site, and this chart's free, so anyone can go and have a look at this one. What this does is it works out where pockets of liquidity are, and when I talk about liquidity, I mean people who are going to be forced into either buying or selling, depending on, you know, which side of the coin That's probably the wrong word to use, which side of the price you're on. But at the moment, you can see that there is a big stack of liquidity above us. So that should, in theory, the big spike there sort of around it goes to about 35 and then it drops off drastically. Just to give, I can't go back in time here, but this previously was like all the way up right at the top and it's just been eaten into. And we're basically coming to the end of the liquidity. So my personal view is that we probably do have enough scope to squeeze higher. I think there's enough there on the table to do that. I think another thing that gives me a little bit of confidence about that is this is the dashboard that we look at. It's the sort of summarized view as to what's going on. And looking at the sort of funding, open interest and long short ratios, you can see that on Bitcoin at the moment, the number of accounts that are long versus short is at parity. So it's not as if we're up here and people are really long. People are, I think, still sort of trapped in their bear market mode, and they are shorting high time frame resistance, which is this sort of 30, 32, 34 kind of level. Makes sense for bears to go short here. So I think overall, we're not seeing, this FOMO of we're going into a new bull market. I think a good example of that is, we did a couple of surveys with on Twitter, and I asked my followers how many of them own Bitcoin at the moment. Now, I don't know why people would really be following me if they don't really want to be involved in Bitcoin. I do tweet about other things, but most people wouldn't be interested. And 30% of people nearly don't have any Bitcoin at all. And I think a lot of people are sort of like expecting this to go quite a bit lower. And overall, we are above the 200-week moving average. So going back to my daily chart, if we have a look what I've got on the chart here, it's quite important, really. And this is why I knew that we would probably not come back to the 200-week moving average. Once we hit up here towards 29K, everyone was saying, oh, back to 25. And you really have to understand how the market's actually thinking. If you get into the detail, you can see that like in this area here, what actually happened is that you can see that a lot of people went short there. Why? Because it was the 200-week moving average, and because, well, it works until it doesn't. And this was just after we had that, scare with the USDC depegging. And so you can see that a lot of people went short here.
Yeah, but that sounds crazy. That was such an obvious place to go full-blown long.
Well, I actually went full-blown long at the 20-week moving average, but each into their own. But yeah, it was it's resistance, isn't it? Right? I mean, it's resistance till it isn't. But I personally was long, obviously, through this. But short, you can see that people shorted it. So obviously when people short, if they want to get out, that becomes demand or buying pressure. Not only that, but we also had people who will have just been thinking, I'm going to buy Bitcoin when it's above the 200-week moving average. So we had buyers at the 200-week moving average. And when you have that kind of buyers, forced buyers who are trapped short, and also people who are going to front run the 200-week moving average, and also people who've taken profit who are smart up at 29K wanting to get back in, the price just moves away. That's just demand and supply in its most basic form. So I think what we're seeing at the minute is we're trying to find that place where, the market makers effectively want us to get to, where they can dump all their bags. And the place to do it probably is where, it triggers the liquidity. So, obviously that will be forced sellers. So all these people who are shorting around sort of 30K, and even the people who probably are still short from the 200-week moving average, are probably going to capitulate somewhere, somewhere around here. And the force of that capitulation really depends as to how high I think we end up going. I think, the overall height that we're likely to get to before pullback would be like 39. But, looking at liquidity, that seems like a bit of a tall order. You can see that it does kind of tail off towards there. However, my gut feel is that we probably won't quite get that far. and not first time of asking, perhaps. I think this 100 weeks is going to be really, really important. So yeah, I think overall, to summarize, things look really good. They look exactly as they have done before. I think that risk assets are underpriced. I think the stock market's fundamentally going to have a reassessment of its valuations due to the efficiencies that are going to be brought about by AI. I think most people still basically don't have the funds, or they're scared, or they're in fear of this impending recession or doom scenario, which hasn't so far surfaced. And as a result, they're all on the sidelines. And I think that could lead to a tremendous FOMO sooner or later. And I think the bears ultimately are going to be in for more pain. In terms of downside, if we do start to see price come back down, I mean, there's obviously curveballs always in all these things. The 20-week moving average in a bull market's always been good. We got our first attempt here, and it was perfection. And it's coming up real hard here towards where the 200-week is. So what I would love to see is if we do some business up here and these converge, we're going to have like the ultimate line in the sand, which is the 200-week and the 20-week moving average, which in my opinion should be solidifying the bottom of the market, should that be retested at some point. So yeah, overall, really positive. I think we've probably got a long way to go before we get to all-time high. Of course, we get all of these sort of really ecstatic YouTubers who tell us that we're going to go to 1 million this month and stuff, which is obviously not going to happen. But and I'm not pointing at you, to Tone, but 39k. Probably like the max upside target, like short term. I think more realistically somewhere just north of 32, maybe it's between, meet me halfway with both of the numbers that we talk, somewhere between maybe 33k or something. But then, yeah, I mean, like fundamentally prior to the halving, every other halving, we ultimately do that 61.8 retrace, and that's 48k. So, if people are out there thinking about maybe where do I offload a little bit and maybe want to try and get back in again, I'd say that based on historics, 48k, and then the bottom of the 100-week would be your re-entry, which by that point, if we go forward in time, that's probably going to be about 30. So I think somewhere, if we can get above this 100, find support, get on towards 48k prior to March of next year, which it's coming up pretty soon. Then maybe as we do go on to riches up towards 200k, which I think there's a pretty solid case for it. So I think that's my general view.
Yeah, no, really, really cool. Someone in the live chat is asking, what is that basket looking thing? And that's the zone where you think people are trapped by missing out on going long Bitcoin. So you're not expecting it to go. You didn't expect it to go into that basket, that square with a bunch of lines in the middle, right? So you probably drew that like a week or two ago, or maybe even
that's right.
And we never got into that basket.
Yeah, I have a call with a fund that I loosely help along with, and this is one of the outcomes of that call. So yeah, around here.
Also, I got yelled at for not letting you finish talking about your $200,000 target. And also I interrupted you when you were talking about your gold targets. So if you can go back to those, I guess since we're talking Bitcoin, finish up your thoughts on 200K. Everyone wants to know about I'm more curious about the more closer to near-term stuff. But if you can finish your thoughts on the $200,000 Bitcoin and then your gold projections, that'd be great.
Yeah, I mean, you can find this on the site under, if you want to read it, under, what do we have it? Under market updates. So if you really want to actually read it, it's there. And yeah, it answers both of the questions. So yeah, I think I was saying that I think that gold, well, it basically, if you take the gold's market cap, so here it's around 13 trillion. Obviously, we don't know because we don't know how much gold there is. But let's say it's 13 trillion. Now, if Bitcoin was to have all of that, Bitcoin would be 670K. Now, there was a presentation done by Tom Lee back in Fundstrat back in 2019, I believe. Might have been 18, not sure. It's on my pinned tweet if you want to go through the presentation. I strongly recommend that all of you watch it because it's pretty much the best sort of investment thesis for Bitcoin. It's here, number 10 on these tweets. And his argument always was that the millennials are going to take on the baton from the boomers. And when they do that, they're going to want to, reserve their wealth or preserve their wealth in the same way the boomers did. But actually, we're all into more digital kind of stuff. Yeah. So the likelihood is that we're not going to be looking towards gold as a place for a flight to safety, but we're probably going to look more towards digital assets. And I believe that to be true. And I believe we saw the first evidence really of that during the sort of USDC, Silvergate, Silicon Valley Bank problem where you actually had to think, shit, where do I actually put my money here? I can't put it in the bank, or I don't feel safe with it being in the bank. Stocks might go down, and I would quite like to be able to access my funds. So, all of a sudden your stable coins aren't stable. You don't want to sell out and go into the bank because that might blow up. So where do you go? You go into Bitcoin. And there's a lot of us now who are millennials and Generation Z or whatever they're called, who are going to go down that route. And I do believe that means that we will see that 13 trillion get allocated more closely towards Bitcoin. So if we work on the basis that the total market cap is 13 trillion, and that's assuming that gold doesn't increase in value, which I'm also saying should happen anyway, Bitcoin would be at this sort of near 700K. So let's say Bitcoin captures 10% of the value of that, which I think is generous. Sorry, not generous. I think that's an understatement. Would be at 70K. Let's say we take 30% of it, and then we get up to the 200K. And that's in an asset that I fundamentally believe is undervalued. And we're talking about increasing. Yeah. So not only do we have a market where the risk off asset is undervalued versus the money printing and the risk associated with that, but also Bitcoin's probably going to capture a bigger share of that. So let's say, gold at the minute is 2K. I think it could go as high as 5K, but 3K looks more realistic on the chart, as you say, which I think I do have that here. So yeah, 2,800 is the measured move off this cup and handle. If we get up there, that means a 50% increase in the market cap. So that says Bitcoin goes to 1 million if you take 100% of it. And that's all Bitcoin is. I know Bitcoin could be lots of other things, but I think right now, the Bitcoin's really its best chance is being gold, in my opinion. I don't know what your thoughts are on that. We can have a chat about that in a minute. But so that basically means, all we've got to do, if we assume that we get this 50% increase in gold, which would proxy mean that Bitcoin should be 1 million if it has 100% of the value, it doesn't take very much for us to get to 200K if we assume that, Bitcoin might get to 20% and we have an overshoot and a bit of a bubble. 200 seems reasonable to me. So yeah, I'm very bullish overall because of all of the above. There is the perfect storm keeps coming for Bitcoin, and the fundamental narrative as to why we need it is only really getting stronger. We do have these fear moments with the stock market and interest rates and inflation, and it forces market participants out because they can't stomach the squeeze that they're getting on their, household spending and the rate at which that's increasing. But I think fundamentally over time that's going to correct, and Bitcoin should be a net appreciator as a result.
All right. Really cool. Thanks for your thoughts on that. We have a couple of questions. I'll throw this one out here because I think it'll be a very short answer. People are asking about the pi cycle. That's called all the prior tops. But we're so far away from the next top that I don't think this is even a relevant discussion, right?
Yeah, I mean, pi cycle. So decent trader. My business partner's Philip Swift, who's the he also owns Look Into Bitcoin, and he is he's the one who came up with the pi cycle top. And yeah, I mean, again, Tone, it's one of these things. It sort of works until it doesn't, and it keeps working. So,
wait, can you remind me? Did it call the top in April or did it call the top in November? When did they actually cross?
The earlier top? So
the earlier top,
yeah.
right? And
yeah.
I wasn't super critical, but that's exactly what I said, guys. There's just I don't think there was enough like data to be absolutely sure. So, do you consider that calling the top? Because this is the tricky part, man. Every time I think back about when did the market top in 2021, it's always a debate. Now, I personally believe that the bear market started in April of 2021, but I did not know that till 2022. Like it's not very helpful. We did make a new high in November technically, but in hindsight, that was a trap. So to me, the bear market began in 2021, even though that wasn't the price top. But if you took the short trade in 2021, you got totally screwed and probably would have like cut your losses literally on the day of the actual price top 6 months later.
Exactly. And I think that's important to note that like maybe, well, some people will have capitulated there, but other people will have been doing it all the way through. And this run up here, you know, you can see it if you look at spot trading volumes versus derivatives. What actually happened was all of that move up here was largely derivatives driven, whereas prior to that, it was all spot. So which is why I really focus on my like volume analysis is always around the spot market, because that's more akin to money coming in and money going out. Up here, like I know that it's a bit of a conspiracy. I don't want to get too much into it, but you could see that FTX was driving the market up here a large amount. If you want to go and do some prior analysis, I'm sure some people will do. You can see that they were responsible
which again,
for this.
You don't know until well into the bear market. Like hindsight is always easy.
Yeah, exactly. But what we did know was that because of all of that open interest and the derivatives that drove it higher, that the downside was like pretty much straight down. So,
yeah.
I mean,
if you leave that chart real quick, right? So during that consolidation, no, go back to the zoomed in version where you were, exactly where you were a second ago. Yeah. So if you look at that, so the entire first quarter of 21. That monster consolidation at the top. No, first quarter.
Yeah.
Right. So I'm bullish throughout that consolidation. And then I basically go bearish when we break that yellow moving average. I'm not sure what that yellow moving average is on your chart, but that's basically when we break that, when we go below the prior swing low. So just as we break below the yellow, that's when I say, okay, you know what? This bull market is probably over. But then on the flip side, if you put that cursor right where the price breaks the yellow, yep, no, that time, to the left, yep, right there, right? So that's when we break below the prior swing low, which is just to your left. That's when I become a bear, but then I become a bull again, just as on the right side of that same white line, when we break the prior swing high, breaking 50K. No, not the moving average, higher and to the right. Too much to the right. A little left, right there, right. No, yeah, exactly. That's when I become a bull again, anticipating new all-time highs, which I was right about, but I expected it to go more than 68 at that point.
Yeah, I think a lot of people did, and I think it was obvious, you know, at the time. And I must admit, I was doing the cardinal sin of trying to persuade myself why the volume indicators might be wrong. But the answer was in the volume. You know, as soon as everything switches from being spot to derivatives, there's a bit of a scam going on, is what I've learned. and you're probably going to be on the wrong side of it. You want to be going with the spot market generally is my, or if it's derivatives and it's not, the spot's not going with it, then it's a bit phony, in my opinion. And I've got a bit of a conspiracy around what happened over here as well, which is I think that the market was propped up for the Coinbase IPO. I think from a game theory point of view, it made sense for all of the exchanges to keep the price up there. So that Coinbase got that high valuation, which will have been derived from the price of Bitcoin. And then also the other exchanges as well will have obviously benefited from that derived value that they will have had and then been able to raise capital or whatever on that basis. So I do think...
My view is a little different on that. This one is not really conspiracy, but again, hard to realize in real time. Around that time, that's when, so the prior 9 months, Grayscale was buying twice the daily mined Bitcoin supply because everyone was piling in to the trust, waiting 6 months and selling GBTC shares at a monster premium. And around that April area, so many GBTC shares were created that no one was buying into the Grayscale anymore. So you had one player that went from buying twice the average daily mined Bitcoin to buying zero around April, and that took another 6 months to weed through the system. And the biggest basically demand for Bitcoin disappeared. And again, that's why in hindsight it's surprising that we made it all the way to 68K, and it probably did have to do with FTX. Because if it wasn't for FTX, that would have been, we would have never rallied. We would have went straight to that $20,000 range and would have got to it a lot sooner.
Right. I mean, I think maybe the two are connected in some weird way. I don't know. But I mean, I'm definitely not an expert on the Grayscale trust. It's a bit of a weakness for me, to be honest with you. But obviously, I know broadly how it works, but I don't know enough. I haven't been tracking it in that much detail to be able to comment on that, to be fair. But I mean, overall, the double top, it did happen, isn't it? It happened. Does it matter why? I don't know. I talk a lot about why do things matter? Like, do they really matter? Probably not. It's like it is what it is, and a lot of the time people focus around the narrative of why something's going to happen and why it's not going to happen. But realistically, just focus on actually what is happening, and that's what broadly I do, is just focus on the data that we've got, and that's telling us that that past performance obviously not being necessarily indicative of the future, but it's pretty good at being indicative of this market. So that's why I stick with really sort of what's actually happening rather than the conspiracies too much. I mean, if you do like a conspiracy, I do have another one for you.
Please.
This is the bottom of Bitcoin, or what we believe to be the bottom. And you can see that once we got to the bottom, here is the box or the gate here is from where Binance turned on zero fee trading, and it is the bottom. So there's a lot of things that come with turning on free trading, such as the ability to accumulate really large positions for not very much. And also during that period, we saw one of the competitors die out as well. So why all this happened right at the bottom, I don't know. I've got other views on it, but yeah, it happened. So
I have a slightly different view on zero fee trading effects. I would say it's the opposite. I mean, if you're gonna go into a large position in Bitcoin, the fee shouldn't really matter. To me, when there's zero fee trading, you can have these, bots that are trading every second, and they can take on infinite amount of trades. But when you have to have a fee every single second, that makes a lot of these bots unprofitable, and they have to be turned off.
Absolutely, yeah. I mean, anybody who's been trading on Binance knows how things have changed since we went across this line. And yes, you are right, and I think largely it was probably to try and attract some depth back into the market. Obviously, market makers and so on are able to conduct business a lot cheaper when there's no fees. So it brings with that a bit more capital, which maybe they knew that they needed at that time to support the market, perhaps. So, you know, overall, though, let's say you wanted to buy, I don't know, 1,000 Bitcoins or more, you're going to get a much better deal if you don't have to pay any fees on that. And the bigger the amount, the lower. Sorry, the bigger the amount, the more you might want to pay attention to that. But anyway, I'm just pointing out it happened. I don't know why it happened necessarily, but next time they turn on zero fee trading, I'll be paying attention. Let's put it that way.
Very cool. All right. So how much more time do you have for us? 15 more minutes, and then we wrap up at the top of the hour?
Sure. I mean, I've been through most of the stuff, really. I mean, if there's any questions or we can wrap it up, it's really up to you. I think maybe we didn't talk about dominance that much. I mean, overall.
No, I'd rather not. I mean, like, you can go through a couple of, altcoins, maybe very quick. I don't want to spend too much time on it. I do have some other questions. I want to talk about the Fed funds rate and the interest rate and your views. Does it affect stocks? Does it affect Bitcoin? In my view, it really doesn't, but I wanted to get your thoughts on that.
Okay.
And also wanted to, you know what? Just take a look at Ethereum and maybe Litecoin, with the Litecoin halving happening before the Bitcoin halving. Ethereum and maybe Binance Coin. What do you think?
Sure. Let's have a look at ETH. So ETH, very similar kind of situation to Bitcoin, but you know, overall, again, it's the same sort of thing. You know, 100-week moving average is currently sat overhead. I do broadly think this is the range that we're going to play in. What was actually interesting with ETH is that we didn't put in a new low after the FTX situation. Like, this is the FTX low. So to me, that says it's probably quite strong. The market on ETH went very, very short due to the unlocking of the staked coins. You know, we saw the long short ratio on ETH go down to like 0.5. So actually it was, you know, nearly 70% of the market participants are short, probably hedging the risk of that dumping of all of the staked coins. And then as a result of that, we got a monumental squeeze to the upside because we did. It doesn't really matter why, but we did. Ultimately because we didn't get the dump, right? And let's face it, people were probably already hedged if they were going to dump, if they're relatively sophisticated.
Can we look at it versus Bitcoin? I really don't like looking at altcoins versus the dollar. It's just, for me, it's always versus Bitcoin. I don't know if you feel the same way or not.
That is very much 2015, 2016, 2017 way that I used to look at things. I don't tend to do it too much because, well, it depends, right? I mean, it depends what your objective is. Like, if your base denominator is like the dollar, so let's say you're a trader who needs to get paid and they need to get paid tomorrow, really, like, the dollar is probably what you want to be looking against. Whereas if you're sort of just trying to accumulate Bitcoin and you just, like yourself, more towards the maximalist kind of viewpoint, then yeah, your base denominator isn't USD, it's BTC, but you've probably got a bit of a longer view. So I think overall, yeah, it's fair enough to look at it either way. I think it's useful to look at it in both lights, but it depends what your objective is, really. So ETH BTC, like, you know, I mean, it's a bit of a horrible chart. Again, I was having a look at this with a few people last week, and it's been in this really disgusting channel here for some time. I mean, I did have a chart which thought that the ETH was going to, well, basically this is reaccumulation, and then ETH should go higher. And I think if we're being consistent, I think it's reasonable to assume that ETH is also going to go to the upside. I don't really see a scenario where versus the dollar, ETH goes down if Bitcoin goes up. That just makes no sense whatsoever. So obviously it comes down to a question of, well, to what extent is Ethereum going to go up relative to Bitcoin? And I have to say that this, to me, looks like it's a rounding bottom, and this is probably going to be a handle and reaccumulation. And as much as we might not like that, I do think that is probably what's going on here, and ETH will probably see continued upside, not necessarily right away and not necessarily before the halving. I think that this thing could go pretty much sideways between like 0.055 and 0.08, possibly for 18 months or certainly 12 months, in my opinion. But I do think that ultimately when we break, if the cycles are anything similar to prior, we get Bitcoin move first, and then you get some sort of shitcoin season. So I'm not anticipating this thing to really do that much between now and 12 months time. I think I'd rather focus on the Bitcoin USD chart, really. I think like maybe selling 0.08 and buying 0.055 or 0.06 is like not a bad place to be as a trader, maybe, if you want to trade between the two. But yeah, I think largely it is kind of saying it's going to go up and to the right. I know that's not probably going to be the answer you want to hear, right?
No, it's fine. It's your view to my audience. They're always asking about ETH. All right, real quick, Litecoin and Binance Coin.
Okay, so Litecoin, I did post about Litecoin a while ago. I don't post that much on TradingView anymore, but again, it's one of these charts where it's the same until it isn't. And the thing about Litecoin that you need to remember is, well, you probably already know this, but Litecoin carvings happened before Bitcoin. And, you know, it's generally, certainly in the previous cycle, to me, it was very important to identify if the market was going to be behaving the same as it had done previously. The first leading indicator of that should be Litecoin making a good move up and towards its halving, and there being some sort of leading narrative, which would give me confidence that we're going to do it again with Bitcoin. And, you know, since posting this chart, you know, we're on the way to what was previously been the point of resistance, which is generally the underside of where we fell from the bull market highs. And that would sort of take us to about 120. So, you know, we're broadly along the way there. I do think that the hype will continue with Litecoin. You know, the better the market for Bitcoin, the more likely Litecoin's going to do quite well. I know this is against USD, but let's have a look versus Bitcoin as well. Might need to go back to a Poloniex chart or something.
Yep, over there, Poloniex.
Oh yeah.
Down. Yep.
So yeah, I mean, it's not. There's no trend here to the upside, is there? I think is reasonable to say. So yeah. Where did we last hit these tops? 2019. So yeah, even after the previous cycle, where did we top out? We got to like 0.006. I mean, this is diminishing. Like, you know, there's no question about this. You know, unlike with the Ethereum chart, which looked quite promising, I think like really, there's really only going to be one use case for a store of value. I don't really see there being room for two participants in that, particularly at this stage, at least, of our development of crypto. So I don't really know what the narrative is for Litecoin. I think there was the idea of it being sort of the silver to Bitcoin's gold, which in your world, silver's not really worth much. So yeah, it's probably going to be of decreasing value. So, you know, are we likely to see it do well against Bitcoin? I would say there's a reasonably high probability over the next few months going into that halving. Yeah. And then after that, well, good luck to you, because, you know, it's probably not worth paying that much attention to, in my opinion, because it's going this way, isn't it? So yeah, I don't know. I don't have a particular view on that, other than this is what the trend looks like. And it probably is actually at the upper end of that. Maybe it runs against Bitcoin up towards 0.006 ish ahead of the halving. But yeah, I don't know. It's not an investable asset for me.
Yep, perfect. And real quick on the Binance token, like in my view, again, versus Bitcoin, it recently made a top. and now it pulled back to its prior highs, and I think that's versus
That's
yeah,
versus Bitcoin.
it pulled back. Yep, it pulled back to its prior highs of consolidation, and if it doesn't reverse to new all-time high soon, that's probably the all-time high versus Bitcoin it will ever reach.
Yeah, I mean, I was quite bullish on BNB at one point. Not for anything other than no reasons other than the actual chart itself, and obviously you can see why. And then obviously we had all of the problem with FTX. I'm not very bullish on exchange-related coins, shall we say. Also, I'm not necessarily exchange-related coins, but generally, securities and all that sort of thing. Not too sure what's going on with the regulations there. So I think from an investment point of view, it will be tricky to get people to want to invest in BNB. I think what is useful on Binance, which obviously is the lion's share of the market's trading volume, is that when we get into a bull market, BNB can be used to reduce your trading fees. So there's this like demand. I think that's the fundamental of the coin, fundamentally. So I think that, if we do pump higher on Bitcoin, there's a chance that we do see some demand come in. We are at a high time frame, previous resistance, potentially turning into support. There is a diagonal there, maybe. So, I think some people would probably speculate long here versus Bitcoin. But for where we are in the cycle, I don't really have the appetite to do that myself. I'm not really convinced on what the investment, the risk and uncertainty around the investment thesis with BNB is a little bit too much for me personally. So yeah, I mean, it's come back to support, as I say.
Yeah. What do you think happens if it breaks support? Like, let's say it goes down and takes out the closing low, that little green candle. If you go a little to the left, that one. If it takes out that low, I think that's it. I don't think it'll ever go back to new all-time highs.
Against Bitcoin, perhaps not.
Yes, against Bitcoin.
Yeah, I mean, who knows? Like, as I say, I generally don't want to make too many assumptions because, I remember trading like Binance Coin when it was $30 and it was like never going to go above that. And then it went to God knows what it went up to. But, if we drop below this here, I would expect us to at least come and test like down at 0.007. I think would probably be a reasonable expectation that this is what the trading range is going to be. Whether or not it ever gets back above there, I don't know. But, things typically, if this is a big if this does happen, what's most likely to happen here? We're probably going to come down here. Then what are we going to do? We're probably going to come back up here. And then what does this become? Like a Head and Shoulders, right? And we end up down here. Yep. So that's possibly what's going to end up happening. But at the same time, I think, speculative traders will probably long here because it's support or previous resistance rather.
Gotcha.
So, yeah.
All right, let's shift gears. I know people are asking for some other coins, but let's shift gears. What are your thoughts on interest rates? I know the UK is raising them as well. The EU is raising them. And of course, the Fed has a rate call in about 10 days. And everyone is expecting the Fed to raise it again, another 25 basis points. What do you think the Fed is doing, and how do you think it's affecting all markets, from commodity markets to equity markets to crypto markets?
Well, that's quite a lengthy one. I might have to ask ChatGPT for the answer, actually. But while you're away, actually, I was looking at this chart of the M2 money supply, and in terms of what are they trying to do, what is the Fed trying to do? So we know that what they're trying to do is they're trying to effectively, we've had this inward shift of the aggregate supply curve due to supply chain disruption due to COVID, plus also the issue with the oil and breaking the supply chain with Russia as well, and that's fundamentally created this supply side inflation. But also, what the problem was that demand wasn't coming down with it, so we created this sort of inefficiency in the overall global markets where we had this high demand and a challenge for supply. Coupled with all this bloody money that they've printed, which led to inflation. Yeah. And the Fed's job is to get it back to sort of 2%, or generally the the global banks are trying to get to 2%. And this is the trend, going back to 1995. I mean, to be fair, you could, it's basically since day one. So this is the M2, turn the money stock. And fundamentally, we had this break here to the upside, a huge amount of money printing. And now what the Fed's doing is they're trying to constrain that and get it back, I think, onto target, onto what they're comfortable with. And I think their policy at the moment, from what we can see, is working. We are seeing that the economy has slowed down a little bit, but and the interest rates haven't completely destroyed everything. I mean, their objective is to, I don't know if you remember, did you study economics? I had the Phillips curve back in
Yes.
back in the days. Yeah. So they broadly think that, unemployment's quite important. So if they can get unemployment to increase, then when they increase the interest rates without breaking the economy too much, they'll keep doing that until, we conquer the aggregate demand and get that to move in, and then bring down that overall inflationary pressure. And from what they're doing, it seems to be working. And we seem to be going on a general trend back to where I believe once we get onto this trend, everything will be all right again. Because that's the sort of we can kind of avoid, we've corrected this big increase in money that we printed, and therefore inflation should probably be fixed by that point. And as I said, Tone, that just so happens to be when we'll have the Bitcoin halving back in March of next year. So overall, I think the Fed are doing well. They have to take action, right? But the annoying thing for me, of course, is it's all a derivative of the governmental policies that we've not really entered into as participants or constituents of our government. So what they're doing seems to be working. I think they're getting it back on track to where it needs to be. I think reducing the amount of money printing is the right thing to do. And yeah, I think that we can probably we're probably due for things to go back up again. As I say, the efficiencies on the stock market are probably going to help with that as a result of this AI innovation. So
back to the other question though, like, do you think the Fed funds rate being dry going up is really affecting the markets, like stocks and Bitcoin?
Well, I think, for a while, it was very difficult to not associate the actions of the Fed with what was happening in the markets. Certainly when they were withdrawing liquidity from the markets or making the cost of capital much higher, that resulted in, various different things. So, investors, so retail, don't have as much money in their pockets. They have to spend their money on their mortgages or whatever other debts they have. But also, investors need to seek their risk-free rate of return has increased by the Fed funds rate increasing, meaning that they need to find, like, if they're not going to invest into bonds, then they have to invest into something else, which is going to yield them a high return. So I think when the Fed was changing their policies, and certainly when inflation was coming out, like in reference to your question, I think it was impacting the market. I definitely think there's evidence for that. However, what is quite important is really that if you look at the dollar, like obviously it was impacting the dollar, so the dollar was strengthening as they were increasing rates. And I think that narrative of, the dollar is important and the dollar is a derivative of the expectation of the interest rates, but is that important with regards to the price of Bitcoin and with regards to the price of equities? And the answer is no, because this is also similar to the chart we looked at before that's going back here, back into the 60s and the 70s. This thing just has been oscillating sideways, and there's no trend here between the dollar changing in value and equities. The only thing that is important is that if you print more money, they all go up. So that's why I'm less bothered about that. And I think it's important for me to look more at, what's going on with the money supply. And obviously the Fed funds rate increasing has reduced the money supply. So there is a correlation there between the pullback on the markets since they started increasing interest rates. So there's definitely a correlation, but over time, it's more about the money printing, which is why, as I say, I'm a simple guy. I'll stick to the things that are really the most easy to follow and understand without drowning in the noise. And I believe that's what's more important to me is the money supply.
Gotcha. All right. We got a couple of other questions, but they don't have really anything to do with TA. And I cover these things all the time. I don't really think I want to get into these. Like, what do we think of commercial real estate? I'm going to answer that real quick. Commercial real estate is not that important. I'm sorry, guys. It's not going to cause a major global collapse. Commercial real estate, it's not going to be built going forward because most people are going to work from home. And current commercial real estate will be turned into condos for residential, and hence residential prices on real estate might come down, which is actually a good thing. It'll help the Fed with their inflation problem, and people will have cheaper places to live in, say, Manhattan. So I don't know why people are making such a big deal about empty commercial real estate. It's not going to destroy the world. Unless you have something different to say on that, we're just going to move on.
Generally, I don't know. Generally agree.
And Fed putting Bitcoin on its balance sheet, I think, is a silly question. Somewhere between never and a long time from now. And also a question on CBDCs. I don't think there's anything I've said about CBDCs that is not like obvious. Anyone that's going to get free money from the government would love CBDCs. Whether you're getting a reparations payment for slavery, or you're getting an unemployment check, or you're getting a food stamp check, you'll take CBDC because it's better than nothing, no matter how controlled the CBDC is. If you are a private citizen, you're going to stay away from that shit as much as possible. And of course, it's going to help Bitcoin because the closer we get to CBDC, the more people are going to want to protect their wealth. Again, these are just obvious questions. I don't think Phil has anything additional to add unless you have something additional.
No, but what I would say, and the worrying thing is that there's a lot more people who don't have anything, who don't really care, and will gracefully take whatever handouts they are provided with, which means that we've got a big bloody problem.
Spot ETF is also coming somewhere between a long time from now and never. They're in no rush to do that. But I'm going to steal a screen share from you. I'm just going to close out with a couple of short, rapid-fire questions, Phil, and then once again show your website and stuff. So real quick, what is your probability on a scale of 1 to 100, well, 0 to 100, but nothing is ever 0. What are the chances the price of Bitcoin will go below 20,000, like, I guess ever again, or in the next, over the next few years? Like, do you think the bottom is in, even the $20,000 bottom? What is your chance that would go lower that from a scale of 0 to
100? I wish you were asking me after we'd broken the 100-week moving average. But let's assume we do that. I would say that the only probability of us coming back to where your finger pointer is there is if we have a COVID-style correction for whatever reason. But I don't think
so very, very low, like a black swan event.
Yeah, it's like, I would say, I'm probably jinxing everyone if I put a really low probability on this.
Mine is super low. Mine is like 1%.
Yeah. Well, I was going to say 5. Let's call it 15. I'm going to say 15 because we haven't broken the 100-week. Okay.
All right. You're being a little more conservative. Yeah, mine's way lower. Now here comes the tougher one. What is the probability that we go below 25,000 on a pullback in the near future?
For how long?
Like not more than a few hours, right? Like with a decent ability to enter the trade, right? Like we stay there for a day or two.
I do think that is possible. I wouldn't consider the whole model to be broken if that did happen, because ultimately the 200-week moving average is down there. It's perfectly reasonable for us to reject off the 100-week, come back down to 200-week, run below it, and people start to get a bit nervous and then go above it. I think, overall on, like, say, a monthly scale, I don't think would close below it in the near future. I do think there's a small possibility that we could could potentially run just below it and briefly and then perhaps go above it. It's not out of my my probability. However, if we do get back down there, I think it's reasonable to say that I'll be a buyer.
Right.
So,
And
okay, so you want a number? Do you want a number?
My chances are actually slightly lower than 50%. So I would say there's a 40 to 45% chance you would get an opportunity to buy below 25K. So something like this, right? So imagine you see these 1, 2, 3 candles right here.
Yeah.
So something like this, just below 25K. I give that a slightly less than 50%. I don't think it'll be that easy. I don't think people will get that chance, but they can, but I wouldn't bet on it.
Right. Yeah. I mean, I wouldn't short the market purely on that basis. I don't. Maybe if we see some rejection, there might be an opportunity to short. But fundamentally, I think 40% ish, 35, 40% chance of that happening is probably about right in my eyes. 45, I could see a case for that as well.
All right. Now let's go to the upside. What is your probability that we break above into new all-time highs? So hitting 70,000 this year.
I'd give it like 1%.
Wow. Okay. Mine is a little bit higher than that. I think there is a chance to break to new all-time highs this year. Mine is closer to that 20-25% range.
Well, if that happens, I'll probably not have done it right. So hopefully not. I'd like to go back up to 48-ish. Get an opportunity to sell around there and come back in around 30 or slightly lower again. That's my preferred outcome. But if we go to all-time highs, fair enough.
So let's increase the timeline a little bit. New all-time high before the halving. That gives you an additional 3 to 4 months.
I'd still say 1%.
Wow. Yeah, very interesting. Okay, so you're not really anticipating new all-time highs before the halving. That is interesting. Okay. All right, and we've got your thoughts on where the top of the market is, so there's no reason to talk percentages. All right, those were my the main 3 percentage questions. Unless you have anything to add, I'll just let you close out while I pull up your stuff. And also, I want to remind people to join us at the Financial Summit. I will be convincing Filb to come and join us in the UAE. It's an awesome event, literally for traders, where we even have a trading contest to see who can make the most money in 6 hours. This is a 6-hour trading competition, like a hackathon, and everyone gets, let's say, 1 Bitcoin to trade with, and you can trade up to 20x leverage. And you get 6 hours, and everyone's in the same room to see who can make a higher percentage, walks away with a nice prize. And also during that day in the morning, we have young traders coming up and presenting their trading strategies and their indicators and their research. On other days, we do other things related to trading. It's mostly trading, but some investing as well. Really, really great event. Hopefully, we can convince Phil to come and join us.
Sure. Whose money are we risking?
Well, nobody's really. So there's a couple of ways to do this. I've played around with this competition. A lot of people don't want to risk real money, but I want a nice participation rate. So what we do is it's actually a fake Bitcoin. It's a paper Bitcoin, so paper trading. But you do walk away with real money if you win. So there is no, you don't get hurt if you lose, but you do win real money if you win. So that means you get a high participation rate, and people do want to win. In addition, I try to convince the better traders to place a bet, risk their own money, like you, me, and let's say 10 other people. If we actually think we're going to win, we would all drop 100 or $200 each, and then the winner walks away with the pot. That's in addition to the general prize to the winner. So we do want competition. We do want some real risk on the line, but not necessarily, trading real capital is not necessary in this case.
Okay, so I heard that there's basically no downside, right?
There is some downside, right? Like if you and I have a side bet on who's going to do better, then there is some downside, but not in the trading account.
Yeah, sure. Okay, cool. That sounds
And
good.
so it's a lot of fun. Yeah, so that's the kind of stuff that we do there at events like this. Okay, so close us out, Phil. Tell us one more time about Decent Trader, and people should follow him on Twitter as well, and also YouTube. People have asked, hey, you haven't streamed in a while or done videos, but that's because the videos are on Decent Trader now, not on Filb's personal channel.
Yeah, so first of all, thanks for having us on, Tone. I'll say it's great to come on, have a chat every now and again, speak to your audience and yourself. It's, you know, we've got similar views of the world, so I think it's always good to get together. Yeah, so Decent Trader, come and join us, join the community. Basically, we like to position ourselves so we've got everything that traders would need in the market. There's a lot of free stuff on there, so that you don't have to necessarily pay for anything. You know, we've got indicators, algorithms, all sorts of stuff on there. So yeah, that's the business side of things. But yeah, on Twitter, I'm just generally giving market updates and all that sort of thing. And generally trying to keep things cordial as much as I can and not complain about the world as it is too much. But yeah, so yeah, come and join us on Twitter and Decent Trader if you'd like to do that.
Awesome. Well, thank you so much for joining. It's been a pleasure. We got to do these more often, and hopefully see you soon. If I ever come through the UK, I'll definitely give you a call. Maybe we can meet up. We almost met up the last time I was there,
Yes,
but scheduling did not work out.
yeah, next time we will certainly do that.
Awesome. Good luck. Wishing you the best. And everyone, thanks for watching. And I will see you all on the next one. Bye, guys.